This is a strategic briefing brought to you by Capital Root, where we grow smart, build wealth, and retire early. Welcome to the Capital Root Deep Dive. Have you ever really thought about what gives a stock its power? That little piece of ownership. Today we're going to unpack that. We'll get into the mechanics behind stocks, the places they're traded, and what really makes their value jump around. The goal here is pretty simple. Demystify it all, give you a shortcut to being really well informed, arm you with some strategic insight. So to really get a grip on the market, we have to start right at the beginning, don't we? At the core idea. Ownership. What is a stock, fundamentally?
Fundamentally, yeah. It's
Right.
not just a ticker flashing on a screen. A stock means you own a fraction, a tiny slice of an actual company. And owning that share gives you a direct claim on its assets if things go sideways, what's called residual assets. Plus, crucially, a claim on its potential future earnings. That usually comes through dividends or hopefully capital gains, the stock price going up.
Okay, so it's real ownership. And you mentioned different types before we started.
Exactly. There's a key difference. Take common stocks, it's usually what people mean. With common stock, you often get voting rights. You actually have a say, however small, in the company's direction. And of course, that potential for the price to really take off, it can be quite a thrilling ride if the company does well.
Right. The growth potential.
Then you have preferred stock. It's sort of a hybrid. It offers priority on dividends, which are often fixed, and also priority if the company liquidates. You get paid before common stockholders, but you generally don't get the same voting rights. So it's often seen as more stable, maybe more predictable income stream.
Less drama, perhaps?
Potentially less drama, but also maybe less of that explosive upside. It's trade-off.
Makes sense. So we know what a stock is now, these ownership pieces,
Yeah.
but where do they actually, change hands? They need a marketplace.
Absolutely. And they have the big global stock exchanges. Think New York, Tokyo, London. These are the arteries for capital flow. Now, the journey for a new stock starts in what we call the primary market. This is where companies issue brand new securities to raise money directly. The most famous example is the IPO, the initial public offering.
Right. When a company first goes public, huge deal.
It is. It lets them raise vital funds. But that's just the beginning. The day-to-day action, the pulse of the market you hear about, that's the secondary market.
Ah, okay. So that's the stock market most people talk about.
Exactly. This is where investors trade existing shares amongst themselves. And this is critical because it provides liquidity, the ability to easily buy or sell. Plus, it's where we see real-time prices based on supply and demand. Honestly, this secondary market activity is what really fuels economic growth and makes the primary market viable.
Got it. Liquidity and price discovery. That makes perfect sense. So now for the million-dollar question, I suppose. What actually makes these prices go up or down? It seems chaotic sometimes.
It can seem chaotic, yeah. But fundamentally, it starts with, the fundamentals, the company itself. You look at its earnings power, often measured by EPS, earnings per share, or just its overall cash flow. How much money is it actually making?
Okay, profitability.
Profitability, and importantly, its projected growth. Where does the market think this company is headed? Then there's the discount rate. This is a bit more technical, but it essentially translates future expected earnings back into today's value, factoring in risk and inflation.
So what those future profits are worth now?
Precisely. And these things together heavily influence its valuation, multiple, basically. How much the market is willing to pay for each dollar of its earnings.
But it feels like there's more to it than just the company's numbers, right? Sentiment, news?
Oh, absolutely.
What?
The market is definitely not just a calculator. It's like a huge theater of human psychology playing out. Beyond those core fundamentals you mentioned, you have technical factors. Things like, is the overall market going up or down? How are similar companies in the same industry doing? Even just how easily a stock can be traded. It's liquidity that affects short-term moves dramatically.
And news can just throw everything off course in an instant.
Instantly. A product launch, a surprise earnings report, good or bad, a global event. Anything can trigger sudden, sharp shifts.
Which brings us to sentiment, that collective mood. Fear and greed, basically.
That's a huge part of it. Collective investor fear or wild exuberance, often driven by cognitive biases we all have, can create these massive tides. These tides can push prices way beyond what the fundamentals might suggest. It's fascinating and sometimes, frankly, irrational.
You mentioned the greater fool theory when we were prepping. How does that fit into this psychological mix?
Yes. The greater fool theory. It's kind of a stark, cynical reminder of how irrational markets can get. It's the idea that people buy an asset, maybe even knowing it's overvalued, simply because they believe they can sell it to someone else, an even greater fool at a higher price later on.
So it's not about intrinsic value at all at that point.
Not really, no. It's pure speculation based on market psychology. It explains how bubbles can form and inflate. Understanding this, recognizing when prices might be driven by this kind of thinking rather than solid value is, well, it's a crucial skill. It tells you when maybe the crowd is getting carried away.
So learning to read those psychological cues is as important as reading a balance sheet sometimes.
For navigating the short-term waves, absolutely. It's a real challenge, but also part of what makes markets so dynamic.
Wow. So this journey through equities is clearly not just about the numbers on a screen. It's about innovation, yes, but also deep human psychology and that constant drive for growth. It really makes you wonder, what hidden patterns will you uncover next in this complex dance?
This has been a Capital Root Strategic Briefing. Subscribe to unlock your financial future with our deep dive analyses on market trends, wealth building frameworks, tax optimization strategies, and the psychology of early retirement. This is your path to growing smart and building real wealth. Check the description to start your journey with us today.